Hey, what's up everybody? I think I'm going live right now. Not sure if I am. In this video, I'm going to be breaking down a full QuickBooks online tutorial. So I'm going to be showing you everything you need to know about QuickBooks Online. So in this video, I'm going to be talking about how to get your QuickBooks Online set up. I'm going to be talking about how to record transactions, how to generate reports, how to reconcile accounts, how to add customers and vendors and bills and invoices, accounts payable, accounts receivable. I have no idea how the quality of this video is. So if you guys have, let me know. Basically, let me know what's going on in the comments. If I need to change anything, or if you can't hear me, or if you can't see the QuickBooks screen, or if you have questions about QuickBooks Online. I am doing this pretty spontaneously. So I'm going to be honest with you. I have no idea what I'm doing right now. I'm not really sure what I'm going to talk about, but I'm going to be here for an hour going live talking about QuickBooks Online. So if you are a business owner and trying to do your own QuickBooks, this video is going to be perfect for you. If you're a bookkeeper trying to do bookkeeping for other business owners, this video is going to be perfect for you. I'm going to be giving you so many tips and tricks on how to use QuickBooks Online. So I'm just going to jump right into it. And if anybody has any questions or any comments, feel free to drop a comment in the chat and I will do my best to answer your questions. So let's see. A little bit about me. I've been doing bookkeeping for the past 3 years. Started my bookkeeping business in 2020, and now I've got over 50 clients. So I do bookkeeping like full time. That's like my job. I don't do taxes. I just do bookkeeping. So yeah, so I'm gonna show you guys some tips and some tricks. So hopefully we can get this show on the road. Let me pull this up real quick, see if that changes anything. Okay. Hey, Zach, can you explain depreciation, how you do that in QuickBooks? Yes, that's a more complicated question, but I will certainly get to that. Yeah, let me talk about some basics first before I get into depreciation, but absolutely. Matt, I see your question. I will get to it. Okay, so let's see here. Let's go to QuickBooks. So this is a sample company. This is QuickBooks Online. So if you are currently using QuickBooks Desktop, QuickBooks Online, completely different from QuickBooks Desktop. So let me just start off by saying that. This is QuickBooks Online. You can access this anywhere in the world from any computer. All you have to do is go to QuickBooks.com and you can log into your QuickBooks account just like you would log into your Netflix account. You can log into your QuickBooks account the exact same way. QuickBooks.com. And you can log in. So let me orient you real quick if you've never been on QuickBooks before. You have your gear icon up here in the top right hand corner, and this is all of your settings. You can go to accountant settings, you can go to your subscriptions and billing if you're having billing issues. If you want to manage your users, you can do that right here. A ton of features, account and settings. This is a good place to get familiar with so that you can adjust your settings if you need to. I'm not going to go over every single setting in here right now, but throughout the next hour, if something comes up, this is what I will reference for your settings. Okay. Now let's keep going with some more. Okay, so let's just start from the top. Like if you were to get a new QuickBooks account, the first thing you want to do is go over here on the left-hand side, go to bank transactions. And the best thing you can do is connect your bank account and your credit card account to your QuickBooks account. This way, all of the transactional data gets automatically pulled into your QuickBooks account. So you will not have the ability to physically move money or pay for stuff by connecting your accounts to the bank feed. So you don't need to be worried about security issues. We are simply pulling the transactional data from your bank into QuickBooks. So you can connect your business checking account, your savings account, your business credit cards, and you can do that by clicking this button right here. You just click link account and it'll a pop-up screen, and then you type in your username and your password for your bank, and then it connects it to QuickBooks, and then you can see all of the transactional data right here. Honestly, if you are just trying to do the bare basics, you can pretty much do all of your bookkeeping straight from this screen. So you can categorize all of your transactions right here. And I'm not going to show you like step by step how to categorize transactions because that would probably take a really long time. But I will give you like a quick example of how to categorize transactions. Now, just keep in mind, every business is different. And so it's all completely going to depend on the type of business that you have. But you can see here, you're going to click on a transaction and it's going to pull in your data in real time, but it does lag by like 24, maybe 48 hours. So today's Friday. So if you spend money today, it's not going to show up. If you spent money on Thursday, yesterday, it might show up. But if you used your debit card or your credit card on Wednesday, it definitely would show up in QuickBooks on Friday, maybe 24 to 48 hours of a lag, but it's pretty much in real time. So you can categorize your transactions. So all you need to know is who did you pay and what did you buy? Like bookkeeping is a 3-step process. You're going to categorize your transactions, reconcile your accounts, and generate your financial reports. That's it. That's all there is to bookkeeping. And so here in your bank feed, you're going to categorize transactions, or another way to say it is you're going to record transactions. And all you need to know is who did you pay and what did you buy. You also need to know like the transactional data details, but that's going to pull into QuickBooks automatically right here in the bank feed. So you can see here, we already have the date. We already have the amount and we already have the bank detail. So we can see here A1 rental, which most likely the bank detail is going to tell you who you paid. So all you need to do is to record a transaction is just tell QuickBooks who you paid and what you bought. It's literally as simple as that. So in your bank feed here, you just click add new if you need to add a new vendor or a new customer. And then for the category, for the account, this is your chart of accounts. This is your expense categories and your income categories. So A1 rental, that's probably something like equipment rental. So we can say we paid A1 rental and it's equipment. We'll just say Ellis equipment rental, that's it. Click this green button down here in the bottom right-hand corner. Hopefully you can see this green button and click add. That's all there is to it. Like it's as simple as that. Now, obviously there are hundreds of different types of transactions. Like this is just one very specific example, but it really is as simple as that. You just click add, and now all of a sudden this transaction from January 31st to A1 rental has been added to your books. Let me turn off my heater real quick. I'll be right back in 5 seconds. Okay, so if you want to manually add a transaction because maybe for whatever reason like the bank feed isn't working, you can totally do that. You just press the plus new button here in the top left-hand corner, and then all of the options are here. So you can manually add transactions. They don't need to be in your bank feed. So here we have all of the same options, and I'm not going to run through this step by step, but basically you need to identify who did you pay, what did you buy, how much was it, and what was the date. Like those are the 4 things you need to do. And you can enter all that information in here. And then this is the exact same way of adding a transaction, the exact same concept. You're adding transactions whether you're doing it manually or automatically through the bank feed. So that's how you do expenses. Honestly, pretty simple. Now that's if you've already paid somebody. But if you want to manage your accounts payable with QuickBooks, you can also do that. So there are different subscription levels. We have Simple Start, Essentials, Plus, and Advanced. Simple Start is only $30 a month, but you actually are not able to manage accounts payable with Simple Start. So you will need to upgrade your subscription to Essentials if you want to use QuickBooks to manage your accounts payable. And all you have to do is click Bill, and this will create a bill or accounts payable or something that needs to be paid in the future. So most businesses, honestly, like most small businesses, simple, owner operator, one person kind of landscaping business or a trucking company or whatever, like most small businesses, they don't really have accounts payable. Like somebody sends me a bill, I pay it, it's done with. But most more larger businesses like real estate investors, they actually have accounts payable, which means somebody will send them a bill and they will agree to pay it in 15 days or 30 days or sometimes even 60 days in the future. And this is great. If you can get set up on payment terms, this will be really helpful for your business and your cash flow. So keep that in mind. The general school of thought here is try to pay your bills as late as possible without obviously incurring late fees and interest and without upsetting your vendors. Like obviously you want to do everything correctly, but try to pay your bills as late as possible and try to collect payment as early as possible. That way you can manage your cash flow. So if you want to add a bill, it's the exact same concept as an expense. However, we are not actually recording a cash transaction right away. So a bill is something called accounts payable, which is on a different space on your balance sheet or in your chart of accounts. So if we create a bill, let me just I know this is like kind of complicated, but if you are a business owner or if you're a bookkeeper, like doing your books, hopefully this is kind of making sense. Like if you're brand new to all this stuff, this might be like really intimidating. But if you have somewhat of an accounting background, hopefully, or if you are a business owner and you understand accounts payable and accounts receivable, hopefully this makes sense to you. So let me show you what this will do by creating this bill. So we just created a bill for Ellis Equipment Rental. And so if we go here in our chart of accounts and we look at accounts payable, which is usually up on the top here, we can view the register. And here we can see this bill. Today's date, Ellis Equipment Rental. The due date was probably like in 10 days or something, or 15 days, $500. And then we can also go to our balance sheet. And this is kind of getting into the weeds of things, but like I just kind of want to show you like full cycle, like what this really looks like whenever you create a bill in QuickBooks, because so many times people are incorrectly creating bills. Just think about it this way. An expense, something you've already paid for. A bill, something that needs to be paid in the future. So that's kind of how you can think about it. So if we go here to our balance sheet, here we have under liabilities, our accounts payable. So this is super, super nerdy accounting debits and credit stuff. So if you're a bookkeeper, listen up. If you're a business owner, don't really care about this. So let me break this down for you in the idea of debits and credits as an expense. So if you swipe your debit card at Walmart and pay for something, that's going to be an expense. So you're going to debit the expense account and credit the checking account. But if you are just recording a bill, it's a two-step process. So you're going to debit the expense account, but you're going to credit accounts payable. And then whenever you actually pay that bill, then you're going to debit accounts payable and credit the checking account. So it's a two-step process because we haven't actually paid the bill yet. That's all I'm going to say about debits and credits. Hopefully I didn't scare anybody, but that's kind of the explanation behind accounts payable from like a nerdy bookkeeping accounting perspective. Okay, so that's kind of like vendors and bills. Now we have the same concept over here with customers. So if you click this plus new button, like this is how you're going to manually create all of your transactions in QuickBooks. We have vendors right here. So everything under here is related to vendors. Vendors are people who you're going to pay. And then over here, we have customers. This is everybody who's going to pay you. So just like we have expense and bill for vendors, we also have sales receipt and invoice for customer. And it's the exact same concept. Sales receipt is to expense as invoice is to bill. If you enjoy analogies, hopefully you appreciate that one. So a sales receipt is the same thing as an expense, but it's for customers. So a sales receipt means that you just received money. Now an invoice, just like bills, an invoice is going to create an accounts receivable. So that means you have not been paid yet. So let's say, I always like to use a landscaping company just because that's a simple way to demonstrate these concepts. If you just went to Billy Bob's house and you mowed his grass for $100, you would enter in Billy Bob as a customer here. He just paid you $100. So you would write up a sales receipt. February 23rd, product or service, whatever that might be, and then amount $100. Now, I do want to caution you, this gets messed up every single time when people are using QuickBooks to manage their invoices and accounts receivable and sales receipts. This little button right here, deposit to, you need to make sure you're doing this correctly. I see this happen almost daily. People come to me and they're like, what is this account? My undeposited funds is like $30,000. What's going on? My income is way too high. So undeposited funds, think about it as like a holding account. So if Billy Bob gives you $100, you're not technically putting that $100 into the bank just yet. So you can, if you want, like quote unquote, deposit that $100 in QuickBooks into this holding account called undeposited funds. So let me break this down for you. If you're a bookkeeper, let me break this down for you. Debits and credits real quick. If you're a business owner, just bear with me for 30 seconds. So you receive $100 cash. So we're going to credit income for $100 and then debit undeposited funds for $100. And then we go to the bank and we deposit the $100. Then we're going to credit undeposited funds and debit the checking account for $100. So it's kind of a two-step process because we receive the $100, but we don't technically receive it into the bank. So we put it into this holding account, undeposited funds. Or if you want, you can skip that as long as you go to the bank tomorrow or the next day or soon after you receive the money, you can just skip that step and just deposit it as a sales receipt straight into the checking account. I hope I'm not losing you guys. If you're watching this, hopefully you're like genuinely curious on how to use QuickBooks Online. And I'm going to be going live here for the next hour. So if you guys have any questions, I'm going to try to kind of give like a broad overview of QuickBooks Online. If you have any questions, feel free to drop a comment in the chat and I'll do my best to answer your questions. But I'm just kind of going over, I'm just kind of like randomly coming on YouTube right now just to like make a live video just because I know a lot of people have questions about how to use QuickBooks Online. So hopefully I answer some of your questions right now. So that's how you do a sales receipt. And then an invoice is just like a bill. So let's say you go to Billy Bob's house and you mow his grass and he doesn't give you $100, but he owes you $100. So now we're going to create an accounts receivable or an invoice for $100. The same way that we created a bill, we're going to create an invoice. So Billy Bob owes us $100. So you're going to fill out all this information and then you can send him an invoice. And then let's say in 10 days, he pays you. So I'm not going to break it down debits and credits again, because I don't want to scare anybody, but like the same concept. It's like a two-step process, debits and credits for the invoice and then debits and credits for whenever you receive the money. So invoice and bill are accounts receivable and accounts payable. And then sales receipt and expense are skipping the receivables and payables and then just recording transactions immediately. Okay, that's enough about like recording transactions. There's also bank deposits and transfers and journal entries. So like if you're paying off your credit card, you might do a transfer. Journal entries tend to get pretty complicated. I do a ton of journal entries for like trucking companies if they buy a truck, or real estate investors if you're purchasing a house. Like typically, if there's a complex transaction that like involves multiple chart of accounts, you would do a journal entry. If you're a bookkeeper, you need to know how to do journal entries. If you are a business owner, you don't need to know how to do journal entries. It might help you, but I see journal entries done incorrectly a lot. So maybe talk to your accountant or your bookkeeper if you need help with a journal entry. Okay, now let me talk about your chart of accounts. Your chart of accounts. So just to navigate there, like I said before, in this transaction screen right here, like you can pretty much do all of your bookkeeping. Like I know this is kind of intimidating, like all of these features down here, but really like don't get caught up in all of this. Like I rarely go to like anything below reports. Honestly, I rarely even go to. Like if you're using QuickBooks for payroll, obviously you have to do that, but like I don't really go down here ever. So don't be too intimidated when you log into QuickBooks. All you really need to do is do everything right here in this transactions tab right here. And you can go to your chart of accounts. So chart of accounts, keep in mind, bookkeeping, accounting for your business, you have assets, liabilities, and equity. Like those are the three big categories in accounting, in bookkeeping, in business: assets, liabilities, and equity. And so that's what makes up your chart of accounts. Your chart of accounts are all of the individual line items under assets, liabilities, and equity. An easy way to think about your chart of accounts is everything on your profit and loss and your balance sheet is a line item on your chart of accounts. So for assets, we have checking accounts, we have accounts receivable, inventory, prepaid expenses, vehicles, trucks, buildings, stuff like that. Those are all assets. And then we have liabilities. Those are things like accounts payable, credit cards, payroll, liabilities, loans payable, notes payable, mortgages, things like that. Like if you owe somebody money, that would be a liability. A line of credit would be a liability. And then equity is like everything kind of left over. Equity also includes your net income. So we have income and expenses. We'll get to that in a second. But equity is also things like retained earnings and opening balance equity, owner's pay, owner's investment. And then we have net income. And net income, everybody kind of knows what net income is. That's your profit and loss. So the balance sheet has all of your assets and your liabilities and your equity. And then the profit and loss has all of your income and expenses. So, but it all kind of like meshes together. Like everything flows through your balance sheet, and then your profit and loss is kind of like a detailed explanation of your net income under your equity. So net income, profit and loss. We have your income, which is on the top. We have like sales or revenue or services or sales of product or landscaping services. In this example, we have income. And then below that, we have cost of goods sold or expenses like advertising and bank charges and equipment rental. And then so we take our income and we subtract out our expenses, and then we get our net income. And that's kind of like the whole point of bookkeeping. Like that's why we have QuickBooks, so that we can calculate our net income, so that we can report our taxes. So in here, in this chart of accounts, we have the ability to create new chart of accounts, and we can also look at individual chart of accounts. So like if we want to drill down and see like how much did I spend on advertising, we can click run report, and then we can run a report. We can do like for the dates, we can do the last 12 months. And then we can see how much we spent on advertising. Another easy shortcut way to do that is we can go to reports on the left-hand side, and then we can, under reports, we can click on profit and loss. And then here is what I was talking about. Here is your chart of accounts. Here are all of your income accounts, all of your cost of goods sold, your expenses. We can filter out by the date, so we can just do last month, last quarter, or last year. Another cool thing that you can do with the profit and loss is you can do a comparison. And I think this is super powerful. It's great to compare maybe January 2024 to January 2023. So I'll show you what that looks like real quick. We can click here, compare another. So let's do last month. There might not be any data because this is just like an example account, but we'll do last month. And then for compare another period, we'll choose previous year. And then we can select money change and percent change. And so we can run the report. And here we can see, so there is no data for 2023, which is fine. But if you had your actual QuickBooks account here, this would be so super powerful and like great data to analyze and interpret. Like you can compare year over year. How is my business growing, or maybe not growing, or maybe failing, whatever the case may be. You can actually see and you can compare, because like it might not be as useful to compare January to December, like especially if your business is seasonal and you just have like different cycles, and there might not be too much growth or change from January to December because it's only 1 month. But I'd be willing to bet that you probably do have pretty significant change year over year. So to compare January 2023 to January 2024, like imagine if you had 50% growth in your income. Like wouldn't you like to know that? And you can figure that out by running a P&L by comparison. So you can compare each individual line item. January 2024, there would be data right here if we had a legit QuickBooks account. But we don't, but that's okay. You can just imagine, and we can compare every single line item. So like we could see like how much did we spend on lawyer fees or equipment repairs or rent or lease in January 2023 compared to January 2024. So you can just, it's just another report. Like there are probably 100 different reports that you can run in QuickBooks, and it can be a little bit overwhelming. While we're here, maybe I'll just spend some time kind of going over these reports. So we have the profit and loss, which is like the number one report. Like everybody's going to be looking at their profit and loss. And then we also have the balance sheet. So like I was saying, with your chart of accounts, it's each individual line item on your balance sheet and your profit and loss. So the balance sheet has all of your assets. Like I was saying before, here's all of your assets up top and your liabilities are down below. So your balance sheet is your assets, and your assets always equal liabilities plus your equity. So to put it in really simple terms, imagine you just bought a house and the house is worth $100,000. And then you have a loan on the house for $80,000. So in this very basic example, you would have an $100,000 house, an $80,000 mortgage, and then you would have $20,000 of equity in that house because assets equals liabilities plus equity. So you would have a $100,000 asset, $80,000 mortgage, $20,000 of equity. That's like a very basic example. Sorry, I just got a phone call. Okay, so where was I? Let's check the, let's see if anybody has any questions. Okay, so if anybody does have any questions, feel free to drop a chat in the comment section of this video. I'd be happy to answer any of your questions. Okay, so no other questions yet. So let me run through a couple more reports for you. Let's see, we have the profit and loss and the balance sheet. Those are easily like the two most popular reports. The other two reports that everybody is going to be looking at, especially if you're managing accounts receivable and accounts payable. Let's see here. We have accounts receivable aging detail. So here we can see who owes us money. This is a super good report. I would recommend, if you are a business owner, run this report every single week so that you can keep tabs on open, outstanding invoices. And then what's cool is you can also customize this report. So like you can change the settings. So like if you wanted to include the email address for your customers, like you can add the email address, or if you like, you can customize it any which way you want. You could, whatever. There's a ton of different options, but just know that you can customize this report, and then you can see who owes you money, and then it sorts it by the oldest. So these are 61 to 90 days past due. These are 31 to 60 days past due, so on and so forth. And then that's accounts receivable. And then you could also like export this into Excel or PDF. And then we also have the same report for accounts payable aging detail. So here we have the exact same concept, except these are bills that we owe. So this is accounts payable, the same concept as accounts receivable, but the other way around. So here we can see like, oh shoot, this bill is actually overdue. So like maybe we need to pay this bill or figure out why it hasn't been paid yet. Okay, so that's accounts receivable, that's accounts payable. Okay, so let me answer your question, Matt. Hopefully you're still watching. I'm going to explain depreciation and how you can do that in QuickBooks Online. So if you have QuickBooks Advanced, there is like this new fixed asset accounting feature that you can use. But honestly, I would recommend tracking depreciation like in an Excel file, and then you can just do the journal entry. That's what I would do if I were you, if I were tracking depreciation. So every month I would calculate depreciation. So let's say, for example, you bought a truck in 2023 for $100,000, and you know that truck depreciates over 5 years. So we have 20. So like you need to do some calculations before you can do your journal entry in QuickBooks. But let's just say we're going to make this journal entry for the end of January, whatever, for January. So all we need to know is the purchase price of the truck and then what your monthly depreciation cost is for the truck. So you would take $100,000 divided by 5, that's $20,000, and then $20,000 divided by 12. I actually don't know what that is off the top of my head. I could probably figure it out, but it's, so give or take 1,666. So hopefully we have depreciation already, so it's an expense. Let's see, we do not have accumulated depreciation. So this is the contra asset account that you have to create. Okay, so depreciation is an expense, but it's a non-cash expense. So we're not spending money to capture depreciation. So we need to find accumulated depreciation, which is probably under fixed assets. Yep, right here, accumulated depreciation. And QuickBooks even gives you a brief description. Use accumulated depreciation to track how much you depreciate a fixed asset. So we'll create this contra asset account. So every single month, if you bought a truck last year, every month you would want to capture $1,666.66 of depreciation. And then you can actually make this a recurring transaction if you want. So then you can, and we'll just call it, truck depreciation or whatever you want to call it, truck depreciation. And then we can make it monthly on the first of every month. And we'll just make it start on March 1st and end after 60 occurrences, because we're going to keep the truck's useful life is 5 years. So every month for 5 years is 60 occurrences. So now just keep in mind, whenever you create a journal entry, a recurring journal entry, this is going to happen automatically. So you want to make sure you keep tabs on this journal entry because it's going to continue to create every single month. So just be careful that it's not happening incorrectly. Or if you sell the truck, you're going to want to change this recurring journal entry. That's another good point. Whenever you sell the truck, you need to recapture your depreciation. So that's probably going to be something you want to go over with your tax accountant, because there's also a difference between book depreciation and tax depreciation. So just because you have one thing in your books for depreciation, like every tax accountant has software that they use, and they're going to calculate depreciation separately on their software. So you can track it in your books so that you have like a relatively updated profit and loss, but all you need to know is the expense for depreciation and the contra asset account for accumulated depreciation. You can do a journal entry, set it up as a recurring journal entry. Okay, so the other thing I wanted to show you guys for reports, actually not reports, I want to show you projects, but I don't know if we have projects on this QuickBooks. I don't see projects, but that's okay. Let's see if we can enable class tracking, because this is huge, especially for my real estate investors. Like if you're trying to learn how to do QuickBooks as a real estate investor, you have to be using class tracking. So if we click on that gear icon like I just did, and then go to advanced over here, we want to turn on class tracking. This is going to be so important. And let me show you how or why in a second. So we turn on class tracking. Now this is going to make your bookkeeping significantly more complicated, but that's okay, because as a real estate investor or anybody else who wants to try, let's say maybe you're a restaurant owner and maybe you have two different locations, but they're all under one business, one checking account, but you want to differentiate between the two different locations. You could also use class tracking to differentiate between the two different locations. So if you see here in this expense, this wasn't here before. Now we have a whole separate category option for class. So this is going to enable us to run financial reports by class. So we can run a profit and loss by class. So that's great if you want to check and track the profitability of individual restaurant locations or individual investment properties. And you can also run a balance sheet by class. So if you have different assets, like different buildings or different loans, or whatever you might have for the balance sheet, you can run different reports by class. And so you can actually identify how profitable was this restaurant location, or how profitable was that property as a real estate investor. So I definitely recommend using class if you want to track another metric. I also wanted to show you guys projects, but for some reason it's not here right now. I could probably find it, but I don't want to spend too much time. Projects are the same concept. Projects are usually linked to a customer. So for my general contractors, using projects would be perfect, because if let's say you go over to Billy Bob's house and you renovate his kitchen, and then he also wants you to renovate his back patio. So you could have a project for Billy Bob as the customer. You could have the kitchen renovation and then the back patio renovation. And then you can allocate expenses and income to each individual project. That way you can track project profitability. A couple more things I wanted to show you guys. Actually, let me check one more time to see if anybody asked any other questions. How is anything involving receipts, payables relevant, given that you only use the bank statement or feed to enter transactions into QuickBooks? Perhaps more specifically, what is the benefit of manually inputting transactions rather than just entering them via banking activity? This method almost feels like cheating, LOL. Yeah, so you can do everything in the bank feed. The only reason that you would ever manually create transactions like that would be is if you are not paying for them yet. So like if you need to, it's called accounts payable or accounts receivable. So if you receive a bill and if you want to track them in QuickBooks, then you would create that bill and then you would run that accounts payable aging detail report that I just showed you. And then you would pay your bills once a week. So it's kind of like a more advanced way of like managing your expenses. Most people just pay their expenses in real time and they don't even worry about accounts payable. But some people like have like a larger business and so they'll have like 30 bills a month or a week to pay. And so they'll enter them into QuickBooks like throughout the week and then they'll pick one day a week to pay all of their bills. So the other option here, and I actually do this for a couple of my clients, is like once I have all of the bills entered, then you can go here and click pay bills. And then here we can see these are all of our outstanding bills that need to be paid. So like you can actually use QuickBooks to print your checks. So like if you're printing checks, you're gonna have to enter them in as a bill and then you can print them or you can just mark them as paid. So we'll say we're using the checking account. See, like you can print the checks or you can not print the checks. So we'll just say we're gonna pay these 3 bills right now using the checking account. And I just click save and then I have essentially closed out those bills. So it's really not necessary. If you're just paying for everything in real time, like you don't need to use the bills or any manual entry. Like you can, like you said, you can just straight up add all of the transactions in the bank feed just like that. I hope that answered your question. How do you automate your invoices to all 50 of your clients each month? That's a great question. Let me show you. So I just have it right here. Recurring. So click the gear icon in the top right-hand corner. Click on recurring transactions, and then you can create recurring transactions. And I do this for all of my clients. I also use QuickBooks as a payment processor. So click this new button right here, recurring transactions, click new. For the transaction type, click invoice, click OK. And then here, we'll just send it to a customer. We'll just pick a random customer, Amy's Bird Sanctuary. We have their email address right here. And then this is super important. We can click this button right here, automatically send emails. That's all you need to do. And then the interval, probably monthly on the first day of every month. The start date would be March 1st, 2024. Terms, I always do due on receipt. I don't mess around with net 30. Due on receipt. And then all you need to do is for the product or service, like it doesn't really matter. This is like a landscaping company, sample company, so it's going to be different. But just like choose like the product or service, whatever, the amount. Let's just say $300. So this is all we need to do. This is it. So we do identify the customer, check this box right here, automatically send emails monthly for the interval, first day, start date, this, whatever that is for you, and then the amount. And then we save this template and that's it. And now on March 1st, I don't have to do anything. On March 1st, this invoice will automatically get emailed straight from QuickBooks to my customer. And then I use QuickBooks as a payment processor. So they can, like once they get the invoice in their email, there's a little button they can press that says pay invoice. And then they can just enter in their credit card information or enter in their banking information and they can pay the invoice directly from the email they get. And last but not least, if you set up a recurring transaction, your customer also has the option to choose auto pay. So it will automatically pay every month and you don't have to do anything. It's so nice. I would spend probably four hours a week creating invoices for all my customers if I did not do it this way. So definitely recommend that you use the recurring transactions. Okay, hope that answered your question. Hopefully that made sense. If you guys have any other questions on like QuickBooks tips or like how to use QuickBooks, let me know in the comments. I'd be happy to answer your questions. If not, if nobody else has any other questions, let me think. Okay, so let me show you here under expenses. If you are paying independent contractors or drivers or general contractors or a bookkeeper, literally if you're paying anybody Anybody who, especially people who provide you a service, you want to go under here, under expenses, and go to vendors. And then you want to click on new vendor, like add this vendor into your QuickBooks. Whatever their company name is, or their first name, if it's a person, first name, company name. And then this is so important. You want to scroll down here to this additional info for taxes, and you want to check this box, track payments for 1099, if they are providing you a service. If they're providing you a service, you need to get a W-9 from your vendors and contractors. And then once you get that information, then you can enter in their address, their mailing address, and their social security number or their EIN. This is so important that you do this because you need to send your vendors and contractors a 1099 at the end of the year. And as long as you check this box right here, track payments for 1099, you can use QuickBooks to electronically file your 1099s to the IRS and to your contractors. You can see this button right here, prepare 1099s. This is how I do it for all my clients and my own business. Like, it makes it so simple. But in order for it to work, you need to make sure you add the vendors correctly. And the same thing with customers. I recommend, if you are using QuickBooks to track your accounts receivables or even to track your sales, you want to make sure that you have all of your customers in here. And then you also want to make sure their email address is accurate so that you can send them invoices to their email address. So hopefully that makes sense. There's no more questions. Let's see, what else can I talk about? We went over transactions. I could talk about reconciling your accounts. So like I said, let me talk about rules real quick. This is one of my pet peeves. So as you categorize transactions in the bank feed, QuickBooks is going to ask you, do you want to create a rule? And at first, it seems too good to be true. It seems like a great idea, but let me just warn you. Let me give you an example. I do bookkeeping for more than 50 business owners, and I don't use rules. So if you think you don't have enough time to categorize your transactions, let me just reassure you, I promise you, you have enough time. It's not worth it to use the rules. Categorizing transactions really does not take that much time. And the reason you don't want to use rules is because QuickBooks will then automatically do stuff for you, which is cool if it works well. But if it doesn't work well, it's terrible because QuickBooks is automatically doing stuff behind the scenes that you don't know about. So if they're making a mistake, that means you don't know they're making a mistake, and that means you're not going to fix it. And then it could go on for a month or 6 months or 6 years, and all of a sudden, like, these rules are just wreaking havoc on your books. So I know that was kind of like 60 seconds too long of an explanation, but seriously, trust me, do not use rules. Okay, so to reconcile your accounts, I think somebody maybe just mentioned a comment. Where do you learn to do 1099s? I just kind of like figured it out on my own. Like, it's honestly pretty simple. Under expenses, under vendors, you just click this prepare 1099s button, and QuickBooks just kind of walks you through it. It's like you just need to know the business's legal name, email, address, and EIN, and then you can just like start doing 1099s. It's really, really simple. I don't know, like, I can't really show you like how to do it because they don't have all the information in there, but it's really super simple. I'll probably just mess around with it. You could probably figure it out, like how to do it yourself. Okay, let me show you how to reconcile accounts, and then that's probably going to be it for this live video, unless somebody asks me a question. Like, if there's anything you want to know, ask me a question, and I'll do my best to answer the question. But bookkeeping, let me go back to the basics. Bookkeeping, it's a 3-step process. You got to categorize transactions, reconcile accounts, and generate financial reports. You should reconcile accounts every single month, and it's super simple. So here, this is the transaction tab, and we go to reconcile. So you just need to choose the account that you want to reconcile, whether you should reconcile your checking account, your savings account, your credit card accounts, and your loan accounts. So for the checking account, all we do is we take our bank statement, our monthly bank statement, and then we look at the ending balance. You got to wait until the end of the month, but if you haven't done it yet for January, now's a good time. Take your January bank statement and look at the ending balance on that bank statement. And then you just type in right here your ending balance and the ending date. It's almost always the 31st or the last day of the month, but whatever that looks like for your bank. And then type in start or click start reconciling. And then all of your transactions are going to show up here. So ideally, if we take the ending balance or the beginning balance, and if we subtract out all of the payments, and if we add back in all of the deposits, that should equal the ending balance. Hopefully that makes sense. Beginning balance minus payments plus deposits equals ending balance. And that's the whole point of reconciling. So we take the bank statement so that we can verify that the ending balance in QuickBooks matches the ending balance in the bank statement. If that's true, if the reconciliation agrees and ties out, and there's no variance, there's no discrepancy, then theoretically our books should be 100% accurate. Like if beginning balance and ending balance match the bank statement, that means everything in between should be accurate. And so this is the only way, reconciling your accounts is the only way that you can verify that your books are accurate. That's why it's the most important step to bookkeeping. This is how we verify that everything we've done for the past month has been accurate. But for whatever reason, reconciling accounts is always like the most overlooked, most forgotten step to bookkeeping, but it's so, so important. So you just take the bank statement at the end of the month, type in the ending balance and the ending date. And then for loans, you got to split the interest and principal. So you should be getting a monthly statement every month for your loan. So you just type in the ending balance on the loan for whatever the date is, 1/31, and then also look at the loan statement, and you should see there should be like a finance charge or interest. So you can just type in here the interest expense and the date of the transaction, and then you start reconciling. And then it's the same concept, like the beginning balance of the loan minus the loan payment should equal the ending balance on the loan statement. And you want to do the same thing with credit cards. I can't stress enough how important it is that you reconcile all of your accounts. All right, that's it for the live video. Hopefully this was helpful. If you guys have any other questions, feel free to leave comments in my videos or join my Facebook group. I do have a Facebook group. There should be a description there should be a link in the description of this video for the Facebook group. I'd be happy to help you all answer any of your questions. That's it for today. I might do this more often. I'll try. We'll see. Have a good weekend.